All right. Good morning. Good morning. How are you guys? I feel a little left out. Only doing these things three times a week. I feel kind of like, what's the market doing? And I don't even know. Everybody's not helping me. We miss Mondays and we miss Fridays already. We'll get back to it. That's all right. We'll get used to our new schedule here on Tuesday, Wednesday, and Thursday. All right. So that's all right. You guys working on your own a little bit. That's probably better anyway. Work on your own a little bit on Mondays, and then we can get back together on Tuesdays. You can think about what you've done. So what I want to do first is I want to go through and on the little marquee we were talking about, we're going to do bulk call spreads, but I want to just quickly review. This is our week 1 of our trading basics for our summer class curriculum. All right. So for those of you who are new and are not aware, this is a lab class for our university. And we're going to go through, and this is where we learn how to trade the financial markets, and we study and we look and we practice what we preach. So we learn about what is a bulk call spread. Then we come in, we put a bunch of bulk call spreads on, and we learn about a UBI, universal basic income. We start running our universal basic income portfolio together, and we just do that kind of stuff. And we try and help everybody along, and you kind of pick your poison and decide what's going to work best for you. And so we're going to come in here. Let's see, this one here is where we're at. So let's see. No, it's this one here. So we're on week 2. So we're going to learn bulk call spreads built one live on. We're going to do more than just JEPQ and Tesla, but we're going to look at how to hedge Tesla. And then we'll go look at JEPQ and we'll see if we can put some bulk call spreads on there. JEPQ is not the best for bulk call spreads, but these are 2 dividend producing ETFs. And oftentimes we want to hedge those. So there's different ways to hedge those. And I'm going to show you how to do that today. But we're going to go look at bulk call spreads and talk about what they are and show you why you might want to use them. How do I get that off there? There we go. Okay, here we go. So let's come in here. See if we can get me out of the way. How do I get me out of the way? There's that. Okay. So this is this is our portfolio that we put a bunch of stuff on in the past, things that we've been playing with and trying out. And we can go down through this quick and we'll see if we can put a bulk call spread on any of these. Well, actually, I want to tell you a little bit about bulk call spreads. We've been doing bulk call spreads, believe it or not, in a lot of these. We've been doing them as poor man's covered calls, but that's all a poor man's covered call is. Basically is a bulk call spread. All right. It's buying a long call and then selling a call against it to collect the premium. Now you can do it on a longer term basis or a shorter term basis. You can do it like we've been doing it, which is a longer term leap. So we've got 311 days where we buy the long call and then we sell the short option above it to collect the premium. And we've been doing it on a shorter term basis. So you can see this one only has 3 days till expiration, where our call has 311 days till expiration. Now, a traditional bulk call spread, they're generally the same time, right? So if they're not the same time, same amount of time till expiration, we'd call that a calendar bulk call spread. So calendar bulk call spread, anytime anything's not got the same expiration dates on your options, throw the word calendar in there, and that just means that the expiration dates are not the same. So what we're doing here, we're calling it a poor man's covered call, but really what it is just a long call, and we're selling short, and we're selling calls against it with a shorter time frame. So it's really just a fancy bulk call spread. That's all bulk call spread is. All right. So we're going to come in here, and I wanted to go in and I wanted to pull up TSLY. Now, TSLY is our Tesla dividend paying fund. All right. So it's a Tesla dividend paying fund. Now, I've been recommending everybody put money into this one, and we've been accumulating as fast as we can as dividends come in from other markets. I've just been pouring them into here. All right, pouring them into here. So I've been building a huge position in Tesla in anticipation of this being that going through that accumulation stage. I thought I had my little graphic right here handy. I did have. Where did it go? Well, I cleaned up my desktop and that little graphic went away. All right. Goodbye, graphic. All right. It was the accumulation model, but you guys have all seen it a million times. It's that accumulation distribution model from Wyckoff, where this is a big accumulation stage. So we've been accumulating down through here like crazy. And now Tesla is being a little bit slow to rise, and that's okay. That's okay. Nothing wrong with that because we don't make money when markets go rise real fast with this model. We make money when the market just kind of wanders sideways and slowly rises because we're just making dividends, right? We're just selling premium and collecting dividends. Now, we're not the ones doing it because we're just giving our money to Tesla, and that's how they do it. They sell the premium for us. They're actually trading options. And it's a whole lesson into how this whole thing works. But this is kind of remember, this is not Tesla itself. This is a fund that trades Tesla with options, and then that's how you get paid out. So we've been pouring our money into here like crazy, and that's been doing really well for us. And so it's been starting to pop here a little bit. So we don't want to put our bull call spread, or we don't want to put our trading on this market because this is the dividend market. So we don't go into TSLY for that. We just buy the shares here. But we go into TSLA, and this is the one where you're like, ooh, baby, this is our rock and roll market. All right, this is the one that's going to be a growth market. And so it's come down. And you know, Tesla had a bunch of protests against it. So it's been struggling a little bit, which is good because if you look at the rest of the market, they've already all shot up like rocket ships, right? And if you missed those and you're like, oh, damn, I missed it. Well, you still got a few opportunities here in Tesla. So if we come in here and we go ahead and label these, you can see that Tesla really, I mean, as far as it fell down, we really wanted to see this whole model on Tesla right here. We want to see this whole model right here. We wanted it to happen up here. And that's the only difference. That's the only thing happened. So with Tesla, the only thing that's happened here, and we kind of wanted to see that whole model happen right here across this red line. So don't really freak out about Tesla. It didn't really, I mean, I know it was a big jump and I know it was a big fall and everybody's freaking out, but really in reality, it just gave us a better opportunity to buy it more at a lower price. It was just a good thing for everybody. I mean, it was a good thing for me, not a good thing for Elon. He's already bought it, right? But it was a good thing for us. And so what really happened, if you think about it with Tesla, is it only fell about that much too far. That's it. It fell about that much too far, that little box. And so that's kind of, you know, can't complain about that too much. That's all. It fell a little bit too much right there. Just that little bit too much. And that's okay. And that's okay. Because everything else turned out just right. I mean, it's just been a nice 3-drive pattern up coming up the other side. And this is just an ABC pattern coming down. It just fell down on that ABC pattern a little bit too far. No big deal. Now we're right back here in this accumulation stage. The market's starting to go sideways. And if you want to put a bull call spread on here, I'm going to show you how to do that. All right. It's very simple. You can come in here and we're kind of, as the market's rallying here, you kind of want to put these in. We're a little bit late to the party, but you know, you got to do what today is. Today is the day we have a lesson. So we got to do it on the lesson day. But right there would have been the best point. That first, see that first candle to break a new high right in there? That would have been a nice place to put your bull call spread on. We're a little bit late to the party, but that's okay. I'm going to show you how to do it anyway. So we're going to come in here to the options tab. We're going to come in and we're just look out. Let's go 38 days. And all we could do on this is we buy a call. And we can buy it right at the money. We can buy a little bit in the money. Let's go down here. We'll put it right at the money and come down to the options table. Do a little options table work. We're going to come in and we're going to say this is a call option. And it's right there at the money. You can see it's $2,497. No, you can't. Let me get out of the way. All right. So it's $2,497 is the premium for that option, for that a call option. And you can see the theoretical value is $3,297. So it's actually selling for a discount right now. And that's probably because the market's rallied a little bit, okay? But that's okay. We're going to come in and do it anyway. And you can see the open interest is way over 1,000. Volume is way over 100. And that's what we need. 100 on the volume, 1,000 on the open interest. Notice the spread is real nice and tight, $15. It's only a 0.01% spread. That's real nice. We're happy with that. If we come in here and look at the probabilities of this thing are going to be about 50% because the delta is going to be 55% right there at the money. So it's a little high on the delta. You could bring it a little higher on the delta, but we don't need to. We could go to 55, 58, but that's going to make it more expensive. The delta is 55. We just want it to be 50 or lower, right? Or 50 or higher, right? And 50 is clear up here. So we're good at 55. We'll take that. Why do you want it to be higher than 50, Lan? Well, 50 is just kind of 50-50. And we put that 5 in there. You know, you get a little bit, remember, it's kind of like trading when you buy an option. The delta tells you how many shares you're trading. You kind of think about it like that. It's kind of like a little trick you can use. So delta says 61. So it's going to make or lose as much money as 61 shares. All right. So that's the leverage you've got. So we're going to do 55 shares. So I like to have it just a little bit above 50. So if it was 50 right here, I'd probably drop it down to the next one, which would give me 55. But it's 55 right here at the money, 2,467.50. And we can do two of them at the same time. This is the long call. So we're going to come in here. We're going to sell the call at the same time up here. So we're going to come in here and we're going to just drop that on the screen, and we're going to line that up with an area of resistance or something where we think that market might go. You can see we got an area of resistance here. We got an area of support right here, support on the bottom, resistance on the top. It broke those blue lights right there. We can bring it right up in there. And you can see we're going to receive $637 against our $2,467. Now, the max money that this thing is going to be able to make is the difference between where you bought it right here and where that red line is. That's $6,676. That's max profit. All right. But it's going to give you that $6,676 plus the $655 of the call. Now, you got to be pretty confident that this market's going to rise, right? I mean, you don't want to buy this and have it tank, because then the value of this option 2052 is going to go down, but you'd get to keep the $655. Either way, no matter what happens, you get to keep that $655. Now, that's a standard bull call spread. No problem, right? Everybody's happy with that. We all understand that bull call spread. The problem with the bull call spread is that this market, 38 days and 38 days, if this thing doesn't go up there and stay above, be profitable by the 38 days, how far does it have to go to be profitable at expiration? At expiration, it would have to go up $2,500 just to get up to break even, $2,500. So it'd have to be right there at expiration. So that's we turned that, didn't we? Let's change that back. Okay, so and let's not make it red. Let's make it a color we can see. How about gold? All right. Gold's not even good. We got too many yellows and golds. Let's make it lawn green. We got too many greens. What's a color we can use? How about cyan? Okay, cyan. We'll save that. Update crosshairs. Back to our charts. Okay. So that's what we can do there. All right. We can come in there, and that blue line is where the market has to be break even by that purple line. That's really the game you're playing. Remember, this is a carnival game. And the carnival game here is that you're going to buy your call here. You're going to put $2,525 in. You're going to put this one in here, and it's going to give you $657 against that. And the market has to be above that blue line at expiration to break even. If it's above that, anything above that's profit, and then you can't make any money again above the red line. So all the profit for the long call is anything in between there. All right. This one is 652. So that's why you want to make sure timing on these is pretty good. You got to be pretty good at timing these markets. You got to say, well, you know what, I'm looking for a breakout and a rally, and that's why you kind of want to put these bull call spreads on at the signals. All right, where you're going to get a break here, where you're going to get a break here, these break points. These are the break points where you want to be putting them on. Now you want to put them on before you get that big red bar right there, or that big green bar. You got to kind of anticipate them a little bit. Okay, because if you wait till they break, well, then it's kind of a little bit too late. And that's kind of how these bull call spreads work. And they work really well. They're really super popular, actually, believe it or not. A lot of people do bull call spreads. And I would recommend you practice them a little bit in your demo account. Try it out, see if you can make some money with them. And the nice thing about them is that what you can do is you don't have to ride these things all the way to the end. That's the thing about them, is you can ride these for 1 or 2 days, get a nice pop like that, and take your profits off. And no harm, no foul. That's it. You take it off, you take this one off. This will drop, a couple $100. This will rally 300 or $400. And sure, max profit might be to that purple line, but you don't need to ride it to that at all. That's just kind of where the death nail is for the strategy. So you just want to kind of ride it till it makes money, and that's it. Take your money off. You can even come in here, and of course, because if we put this on, the nice thing about this is we can come in and we can put this on in our options table. So we got this on, we can put it on. Let's see if we can get it on there. We'll just mark it into it. All right. So now you come in here and then it's on. You don't have to worry about it. You can just come in, right click on it, say liquidate the multi-leg, and we can take it off and we can say receive and we can say 20%. So we're going to bring this up until it says we're going to make 20%. And oh, the percent's over here. We're only at 1.5. Let's type it in. Let's go up to, that's 19. Let's go up to 25 and see if that will. So that's, oh, I did it wrong. Tab. Okay. There we go. Oh, 34%. I went a little too high. Let's go back down to 24.5. And that, oh, that's 31. Let's just run it down here to, let's say 30%, because that's easier for me to type in. All right. So we got a little a table here that we can look at. I'm going to show you how to decide what percent to go on. So net profit is 30%. That would be $560. You go ahead and place the order, and it would automatically take it off as soon as you made 30% value, and that would be $560. You'd be happy with that bull call spread. You don't have to let it go all the way to the end, and it would take it off automatically at $560. And again, you're going to have better luck if you do it, kind of on these little, buy the dips. So put these on the dips, not on the rallies. Okay. Buy the valleys, not the rallies. Okay. So we're going to come in here and I'm going to show you another little trick. Let's bring up my little spreadsheet here. Find it. There it is. And we're going to come in here and I have this little table on here. And get your little calculators out, or your little phones. Get this little phone thing out. You guys all have one of these. Grab this, put it on the camera, and take a picture. Take a picture of that right there. So you got a picture of that. Okay, I want you to have a picture of that. This little section right here. Here, I'll make it easier for you. Well, you guys can take a picture of that. Let me see if I can see if I can try and make it bigger. I don't know if I can make it bigger. Oh, look at that. Make it bigger. There you go. All right, snap your picture of that. That's better. Now you can see it. Okay, you got your picture? So what this is telling us is the simple rule of thumb. IV rank methodology, IV level, profit target. So if we're going to take profits off, we want to know where to take our profits off. Should we take profits off at 10, 15, 20, 25? What do we want to do? And I just got a simple little table here. You can do some math if you want to. You can take the IV divided by 2.5. That's your profit target, but that's a little bit more complicated. Just do that with your little phone. But this is just kind of a simple rule of thumb. If IV rank is at less than 25, you only want to take your profits off at 10. So let's go see. I'm going to take this off the screen for a second, and we're going to go see IV. All right. So IV rank is, that's implied volatility right there. See, implied volatility is 58.72. 58.72. So 58.72 is greater than 40. So we can go for 20 to 25%. So we don't really want to be trying to take off 30%. That's a little aggressive because our little model here says be a little bit more conservative. If it's above 40, go up to 20 to 25%. So we're going to come in here. It doesn't mean you can't go higher if you want to. You certainly can. But our little model says not to. All right, it says take it off a little earlier. But what we're going to do then is we're going to come in here and we're going to say, we already did that, right? We put in there our liquidate, our positions, and our all for this chart. Okay. Orders, did we put them in? We did. There it is. All right. So we put it in at 30%. And that's all right. You saw how I do it. You move it up and down. That's your little table. You can do it at 20 to 25% if the IV rank is above 40. If it's between 25 and 40, do 15. If it's under 25, do 10. And that's just because the markets don't move that very aggressively if IV rank is not high. But IV rank is pretty high on Tesla. And in fact, it's above 40 by quite a bit. It's up to 60. Which is nice. So we're going to go ahead and leave that on there. And we're going to see how that one turns out. So that's your bull call spread right there. Very simple, very easy. Let's come in here just for fun while we're here. You guys, want to see me count this market out. Let's count this market out. All right, we're going to do the odds on this market. Let's come in here and we're going to go view. We're going to hide these on-screen options just so it makes it easier for us. Yes, hide them. Wait, how come it didn't hide them? View, hide on-screen options. View, hide on-screen options. Are you sure you want to hide the options, positions, orders? Oh, you know what? It's not going to hide the open orders. How come? Because they're not filled. That should hide those too, I think, not just the filled ones. Oh, well, let's turn that back off then. Okay, so we're going to come in here. Well, it is a lot of extra text on there. Oh, it's all right. We'll be fine. I'm going to come in here and we're going to count this. So this first thing up here is a little ABC top formation, right? So it comes in here. This is our little ABC pattern. And it didn't drop quite as fast on the second leg as it did on the first. So we're going to do the little trick where you kind of pull that out and line that up for the second leg drop. And so that came down to 161.8, which is, that's a Fibonacci number, and it's not all that common to see it come down that far. But it did. It came down, and it didn't go to 200, and 130.9 is pretty common. And there's your 9100 percenters right in there. All right, so that's the Fibonacci projection scale on that thing. It did drop a little bit slower at the first than it did on the second than it did on the first. That's okay. So we're going to come in here, and I'm going to label this. We're just going to come in with that first break right there. That was our X. We got in X1S. Is that an X1 or an X2? It's got to be an X. That's an X3. Get in X1S. A1. That's our first exit to the short side. And then there's our second exit. See, then we got this huge long drop. And that's our X2S A1. And that's the one we generally figure is a pretty good opportunity, X2S A1, to take that long position, right? A second exit to the second drive down. So X2S A1. And we're going to actually put this up here on this side. Like that. So this has got to go up on the upper side too. There it is. That's our X2SA1. This is actually, I don't have my cheat sheet in front of me. This is actually is that an A1 or a B1? That's an X3SA1. Yeah, so that's a B1 right there. B1S. So that's our second drive to the downside. That's the way that works. So that is X2SA1, B1, X2. That's the way it works out. So this one here is our X3S. No, it's X3A1S. How's that for snazzy? We're going up the other side. So we got the X3SA1, X3A1S to the downside. There you go. And then that's right where it curled and turned. And then this comes in here. And this is our B1. That's our X1SA1. And we don't ever want to take those. Don't ever go long on an X1SA1. Why? Because the probabilities of that thing paying off are almost nothing. Very low. It's a pair of twos. All right. So then when this thing comes down, we got that's big long X2SA1. That's your second exit. That's your first exit, X1S. This is an X2 way down here, A1. And then we went into this pattern here. All right. So that on the way up, well, let's do all of them since we're in here. We're here in school. This is school, so you got to learn. So this is let's see. What is that one? This is going to be C1S, right? C1S. So that's our C1S. So that's our C1 going down to the third next time down. We didn't get it. C1S, this is a C1S F. C1SF. Why is it an F? Because it failed. C1SF, failure. So it failed. Let's do it like this. C1 fail. It didn't continue down. That's all that means. It just means that it gave you the signal to take the third drive down, and it didn't. It did what we really anticipate. You don't generally want to see three drives down because that means you're going into a bear market. So this is technically not even a bear market, all right, because the C1 failed. Did it actually fail? Actually, it didn't fail. Look at that. It came down and touched the exact you know what those guys are doing. I don't know. The thing is this is all mathematicals trading, and so for those of us who do mathematical trading, mathematical modeling and trading like this, the funny thing is, I think it's funny, and if you are a mathematician, you think it's funny. It's a joke. Whether you get it or not, it's if you're a mathematician, it's a math joke. Did you get the math joke right there? Very few people are going to see that math joke. That is a math joke. All right. See that low right there? And see that low right there? It just barely broke it. It broke it by 1 penny. I mean, not even a penny. I mean, it just barely broke it. That's a math joke. That's somebody who runs. That's the big boys. That's a math joke for those of us who read the math. All right. So he broke it by 1 penny just to show you that he could. And he turned your market into a bear market. That's what that did. That is a funny math joke. So for quant traders, for people who trade using mathematical modeling, which is what the quants do, right? And when you're a big quant, you say, "Oh, man, you're full of shit. They can't move it that they can." They had $13 trillion just in one company. They had $13 trillion. You think they can't put that thing right where they want it? They can put that thing right where they want it. That's a math joke right there. Because if you break that, that turns that market into a bear market. That's funny. That turned that market into a bear market on that one little thing right there. Because it broke that previous low on the 2 drive down, and that drive down, this is all mathematics, and it's all how these quant systems are built. And they turned that market into a bear market. Now, whether did you don't think they did that on purpose? I do. I think they did it on purpose. I think but the thing is, nobody's going to recognize it if you don't understand how mathematical trading quant systems are designed. So there's little tricks like that, little jokes in the market. They turned that right there, turned this market, turned Tesla into a bear market. But it immediately came back up. It didn't stay in a bear market. They just turned it into a bear market. That one little touch right there. That's really funny. It's funny to me. I find it to be very hilarious, actually. So, all right, then we got this market here, and it came along, and this came in, and it is no longer a bear market. This thing failed, so it's a bear market fail. So they turned it into a bear market, but then they let it fail. I mean, it failed immediately. It's okay though. They did it. It was funny. So they put that funny little thing in there. All right. So they turned Tesla around. So Tesla's going back up with the rest of the market. All right. So that's it. That's how it works. And let's come in here and label these. That's what we're doing. C1 fail. So that means that this one here, that was an X2SA1. So that means this has got to be X3SA1 because it failed. That's a C1S and it failed. So that makes this X3SA1. Has to do it. It is what it is. There it is. X3SA1, and then this becomes, now you can see why I didn't want all the option stuff in here. Now this comes into being now it's just a straight up B1. Oh no, it's an A2. A2. Type land. So that little marker right there is an A2. So you know what your probabilities are on an A2. That's good probability. So we're going to get this thing's going to probably rise a little bit, and it's rising. We'll see. Maybe go up and touch that red line right there. And then we'll see the little pullback. And that would probably be the A3. All right. So we'll get an A3 in here, and then it'll rally once again. I don't know. I'm just, I'm spitballing here. I don't know how far it's going to go. So, but we'll probably see it come up here, and then that'll be the top. That'll be the A3 will die right in there. I don't know if we'll get an A4. We may. Nobody knows. Generally, we don't. So we get an A3, and that'll be the top. And how high the A3 goes, A3s usually aren't that big. So we'll have to wait and see. And then we'll get the little pullback. We anticipate the pullback, and it'll flush back down probably. And we don't know how far it's going to flush, but technically speaking, it should flush if it comes up to where we just drew our little spitball. It should flush back down to about where it's currently trading, right back down in here somewhere. All right. So if we get a little bit of rally pull up and then a little flush back down into here, that would be classic. All right. We could get it to bounce off of maybe 38.2 and then, or maybe 50%. I don't think it'll come all the way back down to 61.8, but it might. We don't ever know. Down into this is the one standard deviation. So it likes to come back down in there. Depending how strong it gets at that point, I think people like Tesla. So I think that they won't allow it to fall that far, but we'll see. It depends on what the BlackRock wants to do. If they want to accumulate more shares, I think they've got a lot of shares. I think BlackRock's been accumulating shares in here just like mad. All right. And so we got this next rally would be up in here, and we'd break this previous high. You get our little break here, and then the next rally up like that. So I think that we're good shape. I think Tesla's on the recovery, and I think that's where we're headed with it. So I've been, just like I said, I just pouring money into Tesla just as fast as I can buy Tesla stocks. I was buying Tesla stocks all through here. All right. My buying has slowed down. I'm not buying up in here as much anymore because, well, we're on the rally. Buy low, sell high. This is not where you buy up in here. But we can still play or anticipate this next rally on our bull call spread, and that's what a bull call spread is, and that's how you set one up, and that's how you take your profits off. You don't have to let it run to the end. All right. So that is a simple, very simple bull call spread. Now, if we come over here and go to some of these other markets, let's go to AMD. This is also a bull call spread. Now, the difference between this bull call spread and the bull call spread we did before is this has 311 days on the long call, but only 3 days left on the short put. So we're up $150 on this. So now this one we don't liquidate at 30%. We don't do that because we're just going to leave this on forever. We're going to leave this long call on here. We paid $10,000 for it. So we're going to leave that baby on there. How far does it have to go to just get to break even? Well, it's going to go $10,000. So if we go $10,000 up, it's got to go quite a ways. 6, 7, 8, 9, 10. It's going to have to go way up, or even way off the screen for that thing to get to $10,000. Now, that's not true because that's only quantity 1. This is quantity 10. So it only has, quantity 5. So we have to do the preferences on the dollar calculator at 5. So that was a misnomer. So let's put 5 in there. That's shares. So that's going to be 500 shares. All right, that's better. Okay, now it's not going to go clear off the screen. So we still have to go $5,000, and that's right there. That makes more sense. Okay, so that's our break-even point on our long call. Well, we're already there, but it's got to be at expiration. So we're up 4,500. We got 10,000 we paid for it. We're up 50%, but that's because Delta is trading at 55%, right? So that's a break-even at expiration. So that's fine. And our expiration is out there at 311 days. So we're cool. We're in good shape with this one. This AMD is really a good one. So now what we do is we just let that baby ride, right? But in the meantime, we sell these little short calls against it and collect some more premiums. So now we've received $395. Now we haven't received it yet. We got to get to expiration. Expiration is in 3 days. And then we'll get our full $395. Right now we're sitting at $120, and I want the rest. I want the $395. Now, isn't that interesting? Notice that $395, we're getting this is like $275 is the negative 275 is the market value. So 120, isn't that crazy? I mean, the market's been rallying like crazy. That's why it's not been making money, but I mean, it's making a little bit of money, but we're only got 3 days left to go, and it's still, the majority of the premium is 275 is still there. It doesn't matter. We're going to take it anywhere. Just let it go all the way to expiration, take the full 275. We don't care. It's not going to really hurt our long call. Our long call doesn't expire for 311 days. So that's why you have what we call the calendar bull call spread, right? Or this is the poor man's covered call. However you want, whatever you want to call it, it's the same damn thing. All right. So this just has 311 days. All right. So let's bring this back down. And we're not doing a good job, and I apologize for not getting you this spreadsheet yet. but it's probably ready. I could probably give it to you. I haven't just decorated it up and put some pretty colors on it and stuff. But here's the spreadsheet. This is the one we're doing for BMY, and the spreadsheet's working pretty good. But you can see that what we need to do is we need to create a table like this for every single one of our bull call spreads, or poor man's covered calls, or calendar bull call spread, whatever you want to call it. All right, it's all the same thing, just different expiration dates. So what we're going to do is we're going to come in here and we're going to put our original purchase on this one, on this line. So we would put in here where we've got quantity 5, we got 10,900 would be right here. And then we got to add to it or subtract to it from it all of our winners and losers as we sell premium against that call. Okay, so we sell a premium, we collect the premium. Well, that helps reduce the cost of this one, just gives us profit. And we got to tie that in here, and we got to put it in here, and we got to write it on the back of our napkin. Because if we don't write that down on the back of our napkin, we have no idea where our profits and loss on here, because your broker doesn't do that for you. He doesn't look at multiple trades over a year's period of time as one trade. And so that's how we have to look at it too, as traders, right? That's one of the key components of being a long-term investor, long-term trader, is that you make a lot of trades and don't look at each trade in isolation. You got to look at them as a group. And so what this is you can see we had one loser right there. So you can say, oh, Land's a loser. He had a loser. Oh, Land's a loser. No, this is just one trade in a whole series. And you can see we're still at $515 on this one. Now this is Bristol Myers. This is not the AMD, because I haven't done it. And as I mentioned before, I'm not very good at tracking the demo stuff, at the classroom stuff. So I apologize for that. I spend more time tracking my real money accounts, and so I don't get a lot of time to come over and track the demo accounts. But we need to do that, and I need to spend some time and get a couple of these tracked up, and then we can put them into the spreadsheet, and I can get you the spreadsheet. Spreadsheet's pretty simple. You could actually build this yourself if you're a spreadsheet aficionado. You can see in here, I'll just go through very quickly what the formulas are in the video, and you could recreate it yourself before I get you this. I'm going to attach this to the Pit News Magazine subscription. So if you have Pit News Magazine, you'll get the spreadsheet. If you don't have Pit News Magazine, well, you're going to have to build your own spreadsheet. And here's the formulas, all right? So we're just going to go across. Here's the ticker symbol, the action. This is just, you're going to have to just take a picture of this, and you can see each one of these formulas, and then each one comes across here, and this is just, there's no formula in the top one. It's just what it is, all right? And then here's the formulas right here. So it's nothing. We just enter all this stuff in too. There's not really any formulas across here either. We're not doing math going this direction. The math is all this way. So all we're doing is we're taking this number here and we're totaling it right down here minus this number here. So this is just, all this is a sum of these. And then you take this, which is the value, current value. You can write that in there whenever you want. So that current value is right now 10,000. Oh, so it's gone from, oh, well, this is Bristol Myers, the wrong one. Anyway, there's your value. You're going to write that in, and then this is your total premium, and then you add and subtract that. You're actually down $1,400 on this example. Now, if we were to do this one, we'd be up 4,000 plus however many calls that we've sold against it. So we'd have our positive number here instead of a negative number, and we would have all these added up, and you'd give a big positive number on this one. So this one's making lots of money. It's doing a good job. Okay, so that's how you do it. And over a period of 1 year, all of these calls that you sell, basically the idea is to pay for this one. That's the whole idea. You want to have all these pay for this. And then any profit that this makes is all gravy, rather than having to pay for itself. The call options that you're selling the premium against are going to pay for this. So it becomes basically a free trade. That's the idea. Now, if it doesn't make money at the end of the year, if your call option is lower than where you bought it and lower than break even, well, you didn't make any money. But because you were selling premium against it the whole time, it just becomes a break even trade or a scratch trade. You basically paid for it. There was no loss. So you're like, oh no, I'm scared to put $10,000 in there. You just have to realize that over the year's period of time, you're going to make $10,000 selling premium against it, so that you don't actually have a loss at the end of the 311 years. It's 311 days. So you don't have to be scared going, oh, no, I don't dare put on a $10,000 trade. I might lose $10,000. Well, no, you're not going to lose $10,000 because you're going to be collecting $10,000 worth of premium all the way through the year. Now, at the end of the year, you might not make anything. There might be that. It might be a scratch trade, a break even, or you might make a couple bucks or lose a couple bucks, but it's not going to be the 10,000 that you're scared of. It's just going to be, and if the market rallies at all on that option, well, it'll have some profit in there, and then you'll use the premium on the sold calls to pay for it. So that's why, you don't have to be scared about doing this, buying $10,000 leaps, because you're going to pay for those leaps with calls, and then whatever the leap makes is profit because they're going to be paid for with the calls. The premium is going to be paid for with the calls. That's how it works. All right, pretty cool. All right, let's go look at some others. So we've got AMD in there. This is our app 11, and this in here we did a day trade on, didn't we? We just put some 5 shares on there because these are $300. Remember, this was our day trade. So we went in there, and it was actually not our day trade; it was our night trade. Because we were simulating, hey, we don't have $25,000. We want to put some money into the markets, and we can't day trade, so we have to do the night trade. So we put these in at night and then let the market rally out, and this is where we're at. We're up $335 on that one night trade. So that's pretty cool, right? We could, move our stops up. There's all kinds of things now that we have some shares, right? We can start buying some more shares. We don't really want to buy into a rising market, though. We want to liquidate out of a rising market, take some of our profits. But we can bring our stop up all the way up to here, trail up, whatever we want to do. There's so many things you can do once you're in the market. You can start doing options. You can't really do options because options, there's only log 5. If you had 100 shares, then you could start doing some options, playing some options stuff. But right now we only have 5 shares. So that's okay. And we're right up here at our target point. We could even take a profit off. We could come in here, go into trade. We could maybe take a couple of these off. So we come in there and let's take 2 of them off. So we'll sell the market. That takes off $700 and gives us a little bit of profit. So we go sell the market. Boom, just like that. Oh, could not place. Oh, that's because our stop is set at 5. So in the futures market, they let you do that. In the stock market, they don't. So you have to stay equal. So we'll take our sell the market. So that's going to take us off. We now have 3 contracts. What we can do is we can come in and we can say, we'll put a stop right in here for not contracts. These are shares. We're going to put 1 share right here. Actually, we could take 2 off like that. And then we take another one off. So we're going to put 1 here at break even. We'll just put it right down here. Just a little bit inside break even. Right there. That's that. Oh, not going to let me do it because I got too many again. That's 1. Stop. See, they're a little careful for you. All right. So they got a match. This is 2, and then 3, and then this is 3. So there we go. We got to stop here, and we got to stop basically at break even. And then if that market stops us out there, we might have a little bounce and see if it'll stay up there for 1 more. All right. Take our money off. Buy low, sell high. That's the name of the game. You got to take your money off or else you don't bank your profits. Now, you're going to have to pay taxes on it if this is in a tax account. You're like, oh, no, Land, I don't want to pay taxes. Okay. You know how you solve not paying taxes? Let the market come all the way down here and get out with a loss. Then you don't have to pay taxes. Which would you prefer? Get out with a win and pay taxes, or get out with a loss and don't pay taxes? I don't know. It's up to you. You can do it either way. It's your carnival game. All right. So now we're going to come over here and we're going to look at the next one. Bristol Myers. That's the one that's given us a little bit of heartache. And that's what this one is all built around right here. So let's see what our Bristol Myers is down to. Our Bristol Myers, let's come down here. We got to go in and figure out our spreadsheet. This is the one that's given us a little bit of pain in the hiney. So we're going to come in and we're going to go to positions, chart only, Bristol Myers. And how much did we pay for that damn thing? Oh, we only got 3 of them. What are we doing here? I can't even remember what we did here. 94 days. Oh, we've only got a 94 day. Where's our days till expiration? We got a 38 day days till expiration. What do we do with that? We sold a put at 38 days, sold a call 94. So 94 days. What's the value? 2379. So let's come over here to our spreadsheet. We got to put that in here. 2379. 2379. And that's a negative number. Yep. It's worth, oh, wait, yeah, down to 379. Yep. And so that is, total premium is 515, but we've actually got more than that because we got a 100 here, a 75 here, and a 63. We have to put those in there. And I don't know if I've got those in there already. Let's see. So in our spreadsheet, we got to add these in. Do we have a days till expiration? This one here has 3. This was a 5250 call. Do we have that in there already? 5250. Oh, it's right there. Expires on 5/16. Yep, that one's in there. So 103. It's actually up $100. Total gain. Total premium was 103. We haven't got any realized profit. So it's up $100 and the total premium was 103. So we're already, our gain on that thing is 97%. We can't really make much more than that. Let's take that off and see a realized profit of 100.50. We're going to take that off right now. So we're going to come in here and we're going to liquidate this one. No reason to sit on that any longer. Market. So we actually didn't, yeah, so there's that one. Now the next one is our 45 put. Now it's a stupid put. Why have we got a put? Oh, this is the one we sold. We don't want to get rid of that yet. It's it's the gain. It's up 28%. Do we think the market's going to keep coming down? It expires in 38 days. We would buy another 100 shares. We're going to do that. We're going to leave that one on. Let's leave the put on. All right, we sold that put. We're going to leave that one on. The next one is the sell the call, the 05/16/52 call. So the 52 call is this one. We sold a call, expires. Why don't I have the expiration date on there? Expires on 4/25. That's not right. Expires on 6/20. 6/20/2025. Oh, this one here we liquidated. Our expiration is 6, and this one we liquidated. We liquidated this on, what's today's date? 05/13/2025. All right, so hopefully you guys are doing this with me. Days till expiration. This one here, we want to liquidate that. Do we want to liquidate it? We're up 76% on it. How many days do we have left? Days till expiration. Oh, we only have 3 days left, and we can get our 100%. We're going to leave that one on too. Let's leave that one on. We'll get our full premium on that one, which was $82. Where do I have that on here? I don't know if I even have it on here. I'm not doing a very good job of keeping up my spreadsheet. You guys have to do a better job keeping up your spreadsheets. So we're going to keep both of those. All right, we'll make more money if we keep them both. This one we don't mind if we get filled on. We end up with 100 shares of BMY, of Bristol Myers at that level. I'd be happy with that. That's way down here. That's a good price to be buying Bristol Myers. So we wouldn't feel bad if we bought that Bristol Myers down there, and then we'd have 100 shares that we could play some options against. And we got that long call up there, which, that's what we're trying to cover our bases on. Days till expiration is only 135. And actually it's gone down. So that's changed. Our days till expiration now, days till expiration is 94. So we only have 94 days till expiration. I don't know. This is going to be a fun one to see if we can scrape out a break even on. Unless Bristol Myers takes off and goes to the moon with the rest of the market, but it doesn't seem like it wants to do that. So, all right. So that's our trouble child. And we got in here CMR Salesforce. Salesforce, I don't have a spreadsheet for it. We need to put a Salesforce spreadsheet in there, show that we were making money on this one 3 days. Don't worry about it. It'll come off full profit, receive $355, no big deal. And then when it comes off, you'll get your 355, and then this will start making money again. It stopped making money at this point, but as soon as this comes off and you get your 355, boom, it'll all go back in, and it just stops making money here. But as soon as that comes off, then it's irrelevant, and you'll get your 355. All right. These don't pertain to you unless you liquidate. You just wait till this, then you get 355. What they'll probably do is give us 100 shares, and 100 shares short. They might take this off. They might take it away from us. This is 3 days till expiration. This is a sell one. This is a buy one. They may take it away from us. We'd have to roll. If they take it away from us, so what? We just make a whole bunch of money. How much we make? All the way from here to here. We'd make 2,496 plus 355. So 2,000, that's a 5, 6, 7, 8, about 2,800. Take it away from me. I don't care. Exercise me. Take it away. Give me my $2,500. I don't care. It'll work for me. Do that to me. That's fine. All right. Cisco, same thing. We got this one way up here. They'll probably take it away from us. This is buy one, sell one. 3 days. They'll take it away from us. Full profit. We'll get full profit out of that. Well, I probably won't get full profit because this is not 311 days. This will just expire, and they might take it away from us. We'll see. I don't know if they will or not. Receive our $94. We could just take that off right now. Let's go ahead and liquidate that. Oh, wait, that's a profit. That's a loss. We don't want to take it off at a loss. Well, they may take it away from us. If they take it away from us, how much are we going to make? Who cares? Take it away from us. That's not very much money. $300. Who cares? We just make money. Just how much we'll make will be the question. All right, there's another one. Ooh, this one we don't want them to take it away from us. Look at this, NVIDIA. We didn't put a covered call on this one. We didn't cover this one. We just got our long call in here. No covered. Look at that baby, rock and roll. We've been pouring money into this market too, but not in NVIDIA. We've been putting it in NVDY. Have you guys got any NVDY? Oh, that didn't load. I don't want to reset my computer for that. NVDA. How much NVDY do I have in real money? Let's go see. NVD, just for fun. I'm going to look at my other account, my real money account. I want to see how much NVDY I have. Oh, not as much as I wish I had. I only have $50,000. Let's see if I got more on the other account. NVDY. Oh, I got $75,000 worth of this market right now. That's rocking and rolling, man. That thing's up a lot. Nicely done, NVIDIA. So we've been pouring money into there, not as much as I'd like. I got $75,000 in there. But this is a $12,000 option. 5 calls we got for 311 days. That was a wise choice. Did you guys, any of you do that one? Did you do like I did and put it into NVDY? All right, super microcomputers. This one here has been causing us a little stress too, but it's back in the game, back in business. So we're back in business with this one here. Let me get over here. So super micro, I think we put some shares. We bought this one on the day trade thing. So we were day trading this one. So we got some. How much is our shares? How many shares did we buy? Buy, call, buy shares. How many shares did we buy? 23. We were able to afford 23 shares on that strategy we were doing, and it's up $117. There you go. Can't cry about that. So that little strategy worked out for us again, too. We've also got the options in here. Again, I don't have a spreadsheet for these. 311, we got 3 days till this call. It's up 6%. Oh, that's because it's made 70 down. That's because our call option, it leaped like crazy today. 3 days till expiration. 3 days. You think it's going to be above that red line? Probably. Let's wait and see what happens. We may have to roll that one out. That's 20. I don't want to roll it today, though. Let's wait and see what happens. We could just get it out of there. SMCI is taken off. We could just get rid of it right now, liquidate the option. And then we don't have to worry about it. And since let's just mark it out of it. Just take our $120. Get it out of the way. How's that? Come on, get off of there. It's not going to let us do it with a market order. Oh, it did. There it goes. It went just as I tried to remove my limit order. All right, so we got our long 311-day leap on that thing. And how many do we have? We bought 20 of them at $25,000. So that's pretty awesome. And do I have any of that with my real money account? I don't think I do. I don't think I do. I think I got rid of it. I don't have any of this in my real money account, and I'm feeling really bad now. I just get spread too thin. And all my dividends keep coming in. Oh my gosh. We got to go look at our dividend portfolio before we call it quits too. All right. Let's hurry up, Lan. Oh, this one's not good. This was our AT&T strategy that we were trying to go long on. We're going to close that position and cry. Cry. Tesla. What are we doing with Tesla? Oh, we put this on. Look, it's up $52 on our bull call spread that we said don't do it right here because this is a bad timing, but it's up $52. We made $52 during class. Let's liquidate our multi-leg. I don't really like it right there. I mean, it could go up higher, but we're not going to be watching it, so I'll leave it on there. Leave it on there for a day or two. Let's see what happens. All right, we got your order and take it off anyway. No, you don't. I don't? No? Oh. Let's come in here and liquidate this multi-leg. I thought you had that on there. 2, 3, 4. We want this one at 20%, right? Because it's the IV was high. So 19, we're going to have to go up to about 20.5. Let's see if that's good. That took us up to 9%. We got to go higher than that. Let's go 21. How did that do? 12%. Oh, we got to go higher than that. 22%. Let's make a bigger jump here. 18. Let's go up to 50. 22.5. See where that takes us. 20%. 20.7. Let's bring it down to 20%. 20%. There it is. $373. Let's just leave it there. Take it off at 20%. How does that sound? Place that order. All right. We'll take it off when it hits 20% profit. All right. Let's go look at Tesla. That's the one we already got lots of cash in. XLB. What's going on with XLB? Oh, we took a short position here in anticipation of a break below, and it didn't go. It's going to go up here, but this is only 3 days. 757, 800. Might as well not. Did we sell or buy? Oh, we bought. It's not going to liquidate that option. That was pain. Cry, cry. XLE. Oh, we turned a loser into a winner. A winner into a loser. This was a winner. It was making money, and we said, well, let's hang on to it until it touches the blue lights. And it never did touch the blue lights and turned around and went up. And because it was this account, we didn't watch it. Cry. That's what you get for not watching, paying attention. Mark it out of that thing. Cry. All right. That BMI. Rotten BMI. But I can't feel too bad about it. We've got our spreadsheet going on that one, and we're building up a nice little chunk of change to help cover it. But we got to do it. We got to do it. You can't just have all winners. Sometimes you screw up and make losers, and you gotta turn lemons into lemonade. All right. So now let's come over, and we're gonna pull up our UBI UTU class. My UBI 2024 account. Poor man's covered calls. Here we go. Let's save this. And we're going to pull up the UTU class calculator. All right. So how much money are we making, guys? We making some money? Are we making any money? So we get to, I know we get to at least count. We've had a Friday on this one. So we're going to come over to our calculator, to our April. What's this May? This is May, right? This is the month of May. So with the month of May, we get to come into, let's pull up this. Oh, hey, Pit News Magazine. How many of you have Pit News Magazine? Pit News Magazine? What the heck is Pit News Magazine?
Hey everyone, it's Claire here. Are you ready to take your trading knowledge to the next level? Welcome to Pit News Magazine, your trusted source for trading intelligence. Whether you're a seasoned trader or just starting out, this magazine delivers the insights you need to stay ahead of the market. Featuring articles from experts like Dr. Scott Brown, Aidan Gray, myself, and of course Mr. Land Turner. Pit News brings you exclusive strategies, deep dives into market.
All right, that's enough of that. You get 50% off if you go over there and use the code 50% off. Go get a subscription of Pit News Magazine. That's good enough. All right, let's get busy again. I got to make that ad shorter. I know you guys who have never seen it before, like, wait, let it play. But those of us who have seen it before, it's too long. All right. Get Pit News Magazine for 50% off right now. $19.95 for an entire year. 12 issues. Don't miss it. Type 50% off in the code for the discount. There you go. Sorry, Claire, I cut you right off. Okay, let's get in here and start looking. Have you guys seen CVNY, Carvana? We talked about it last time, and it's just been going straight up. It's made a nice little, you know what? This little tool doesn't work very good. We can't do that on here. We have to come back over to here. CBNA. Let's pull up, let's just do new. Okay. CVNA. This is Carvana. And we talked about Carvana because Carvana is that car company. They're not even a car company. All they do is sell cars. They're a car company. They're unique. You go online, you buy your car, and you go down to the vending machine, and you buy your car, and you drive your car out of the vending machine. That's that company. Weird little company. But they're making billions of dollars. I thought when it came out, I was like, who's going to do that? That's the dumbest thing ever. Who knows? Don't ask Lan. I thought that was dumb. I was like, you're going to make vending machines for cars? Nobody's going to buy a car and go down and pick it up at the vending machine. I was wrong. People do this all the time. These guys are making billions of dollars. I think we showed you last time. For those of you who weren't here, look at this. Come on. How do you get find it. Where is it, Land? There it is. Look at this thing. We slide down here. Look at the value of this thing. Oh, this is CVN. You got to go to CVNA. So CVNA. Oh, look at that. My sweet little Filipina is bringing me a nice hot tea. Thank you. All right. Come here. Come here. Come and be famous. Come here. There you go. This is my dog right here. This is Chow Chow. Hey, say hi to Chow Chow. Little Shih Tzu. That's exactly what he is too. A little Shih Tzu. All right, let's come in here. So Carvana, look at these guys. They make billions of dollars. Can you believe that? Look at that. Sales $13.67 billion in cars from a vending machine. They sell vending machine cars. Get on their little app, you buy the car, you go down to the vending machine, and you drive away. Don't even talk to anybody. Nobody to talk to. Go down there, put your code in, keys fall out, just like a vending machine. You drive your car away. All right. So that's Carvana, and they're making money. And what's great about Carvana is that they have CVNY, and you can now get dividends on them. Because look, there's no dividends on CVNA. It's just growth, no dividends. So if you go to CVNY and you want dividends, look at this. They're paying dividends at a rate of, come on, $2.68 a share. That's crazy. $2.68 a share. You're like, well, Lance, some of those others are $5 a share. Yeah, but their share prices are like $100. So look at this. This is $43 a share. $43 a share, and they pay you $2.68 a share in dividends. That's kicking ass. That's taking names. All right. So that's a good deal. Okay, so let's come in here. And I don't have any of this. Why don't you have any, lad? Because I was putting my money in other stuff. I wasn't really thrilled about opening up and starting a whole new, but I guess I don't know. I got like 10 of these things. I got too many. I'm writing an article in Pit News Magazine about, so we're going to come over to CVNA. And they tried to make a little Head and Shoulders in here, but it was kind of ugly. But there it is. There's your little Head and Shoulders formation. And so there was your break right there. There was your sign. Look at that, baby, go. It just went straight up, just like Palantir. PLTA is another one that I'm very disappointed in. Why are you disappointed in PLT? It's Palantir, PLTR. Why are you disappointed in Palantir? Because it was supposed to break the blue lights right there, and it didn't do it. That's where I was going to buy. I had a big buy order right there to buy when it broke those blue lights, and it didn't break them, and now it's come all the way back up here again. What are you going to do, Lance? What can you do? What can you do? That was my first entry. I was going to put in a nice little chunk of change right there when it broke those blue lights, and it just missed it by like pennies. So it missed my order. It didn't take it. See? It missed it. Now I had a whole bunch. I had $100,000 right here. I got in 100,000 and I rode it all the way up, and I took profits along the way and took most of it out. Now I still got a little bit, still got like 10 grand or something. So, but then when it came in here, I was going to start adding back in, right? So I want to buy low, sell high. And that retracement just didn't happen. It just didn't occur. And it was supposed to come down. I was supposed to take my first re-entry right here at 38.2, which is right where those blue lights are. And it didn't happen. Didn't touch me. And then it took off like a rocket ship and left without me. And I was going to put my second tranche in right here. Actually, I was going to put the rest of it in right here because I thought, man, if it gets back to that mall, I want all of it in. Now, that doesn't mean I don't have anything in there. I've got like $150,000 in Palantir, but I wanted more. I wanted more. Now it's going without me. So wanted more. I wanted more. I wanted a lot more. And you know what that means? It means I got a whole bunch of money sitting in cash, sitting on the sidelines that was going to go into Palantir, and now it's not going into Palantir. So what's it doing? It's sitting in cash. It's not making me do anything. Well, it's earning a little bit, 4.5% return or something. But I got a whole bunch of cash. So what did I do with some of it? Some of it, when that took off and left without me, I put some into Tesla, TSLY, because Tesla's going to pay out their dividends here pretty soon. So on Monday, what's today, Wednesday? No, today's Tuesday. So some of my money went in right here. So I got in right there with a little bit of Tesla. But that's okay. I've been putting a lot of Tesla in. I get a lot of Tesla. I get a lot of Tesla. You know what I got too much of? I got way too much of? This one. I got way too much of this. Way too much of this. I got way too much of this. But it's sure nice when the dividends come in. The dividends come in on this one here. It's actually MSTR. That didn't load very well. MSTY is where I got my dividends. And when the dividends come in, man, they're nice. Because if we go over to MSTY, where's MSTY? MSTY. Oh, that's not going to work. MSTY. Look at the dividends on this baby. They pay out a dividend of $2.37 a share, and the shares are $23. $2.37 a share, and the shares are $23. Oh my hell! Of course, now that's not what I paid for the shares. I paid I think I'm up here. That's my line right there, $32.60. So I paid $32 a share, but I'm getting $2.37 on $32 a share is my average price. I haven't been averaging down because I haven't been putting more money into Misty. I haven't been adding in as it comes down. I haven't been dollar cost averaging. I put my money in right there on the way up. I put my money in right there on the way up. How come that piece of crap doesn't work? This line. Oh, come on. Can't you draw an arrow, little Mr. Tool? So hard to use this tool. All right, so there it is. That's where I got in. And so I got in right there. Actually, I got in here and then add a little bit more. Actually, I just think I put it all in at once. I just like, here you go. And then it went like that. But it shows that I'm down, but I'm not actually down because my dividends were huge, like my hands, huge. And so I'm making money hand over fist on that one, believe it or not. Lots and lots of money. Okay. This is a good one. So I got way too much of this. I wish I had less of it actually, and I could put it in other things. What would you put it in, Lane, if you had other things to put it into? Well, I would have put it into Palantir, but I did put it into Palantir. I got a lot of Palantir, but not enough. I want more Palantir, but I can't get in right now. I got to wait for the pullback. Can't buy high. I don't know. I've been putting it into Tesla. Tesla's where all my money's been going lately. All right, we got to get back to what we were doing here. Where's my spreadsheet? So here's the spreadsheet. So we got to go in and pay ourselves. So let's go see what we've done. We got $50,000 in YMAG, and YMAG has made a couple payments in May. So how's our May doing? So we got to go to YMAG. And our May payment for YMAG, how many have we got? This is May 8th. This is May 1st. Oh, we got 2 payments. So we got to pull out our little calculator. We got to write these down. We're getting behind. We haven't done this in a while. You guys want to stick around with me and see how much money our portfolio has made? It's a lot of fun. Don't run off. You can see this. I know it takes a minute. It's real life. I mean, I could just do this as a video, right? And then just come in and say, I made this much, I made this much, I made this much, like those other channels do, right? But they're not live. So they edit out all the stuff, and that's cool, right? But then you don't get to see all the sausage being made. If you guys want real life and you want to watch the sausage being made, well, you're at the right place because we make a lot of sausage here. All right. We don't just we just don't serve it to you up on a platter. You got to watch it be made. And that's the ugly part. Nobody wants to watch it be made unless you want to make it yourself. All right. Let's make some sausage. So what we have to do is we have to come in here and we have to write this down. We have to say that our dividends on May 1st were 0.101, 10 cents. All right. And then our next dividends for May were May 8th, and they were 10 cents again, 106. Oh, they went up. Not much, but a little bit. That's better than nothing, right? We always like to see them go up. All right, so let's come over here. Now, how many shares do we have? This is really cool, right? We got a lot of shares. We got how many shares? Where's our shares? Shareholding. We got 2,630 shares. Well, we have 2,630 shares, 30.19. Don't forget the 19 times on May 1st. We got 10. 0.101. So we made $265.64. And then on the next one, we got to do the same thing. $2,630.19 times 0.106. 106. We made $278.80. All right, let's go put those into our spreadsheet. So on YMAG, that's this one here. YMAG is the Magnificent Seven. So this is the month of May, and it's 20. What? Look at that. 2025. And it's, oh, I don't want I want this all to be text, you ding dong thing. Text. It says text, but then it didn't make it text. And look, I got 26, 27. It just keeps counting them up. You'd think this was smart enough to know that that's not counting up. That's AI for you. No, it's not. AI wouldn't have made that mistake, would it? 2025. Got to have human intervention here. Oh, my goodness. Come on. Now center all those. Come on. You can do it. You can do it. Okay, now we got to come in here. Now, this is how I do it. For the month of May, we're going to have 4 payouts on each Friday. We might have 5 on this one. Do we have 5 Fridays in the month of May? In the month of May, we have 1, 2, 3, 4, 5. We do. We have 5 Fridays in the month of May. We're going to get paid 5 times in this month. Now, one of them is going to be small. You mark my words. One of them is going to be small. They'll do a reconciliation month week, and it'll be a real tiny little thing. We'll see. I don't know. We'll see. Maybe not. All right, so here's how I do this. I come in and I create a formula so that I don't run out of space, and that's the reason why. So I go equal sign, and then I put in here 2065.60. That was 8, right? 64 plus 278.80. All right. So if you do that, that gives you the total of those two. So that's how much we've received in dividends so far in May for our investment of $50,000. And we're going to take that number and we're going to come over here and we're going to put it in our column right there because it's YMAG right here. I'm going to go like that. And I'm just going to go equal sign. And I'm going to take this month number right there. Now, as we get 3 more payments in that month, I'll just come over here and I'll add those 3 more payments right in here, and that'll reflect over here automatically, and it'll also reflect up here automatically, all right, because we're taking this number, this total here, and we're putting it up there. So there you go. So we just made $544 in the last 2 weeks on that one. Let's go and see the next one. We got $5,000 in NVIDIA. Ooh, and NVIDIA went shooting up. Not that it really matters because we're taking the dividends. We're looking at the dividends. All right, let's go see what our dividends are for NVIDIA. That's going to be exciting. Oh, wait, let's go see if we even got paid. We might not have got paid. NVDY is our symbol. And have we got paid in May? No. So we don't get a payment in May. The April payment was 67 cents for every one. So that's what we can anticipate. Well, if you want to anticipate it, you do, the number of shares that you got multiplied by 67 cents, and you can see how much you're going to see. So we can go back over to our spreadsheet and say, well, how much do we get paid last month in NVIDIA? Last month in NVIDIA, we got paid, we don't have very many shares. We've only got 290 shares of NVIDIA. Oh, well. We got paid $193. It's better than a poke in the eye, right? I mean, we started it. We could put some more of our money into, we just made $500. We could put some of that into NVIDIA and grow it. We got Microsoft. We got another little puny one here with Microsoft, $499. We got 28 shares of Microsoft, MSFO. When does it pay out? Day 12, and we're on day 13. Let's go see if we got paid on Microsoft yet. All right, MSFO. So we come over here and we use this little program because this is the one that tells us the dividends, MSFO. Track and Trade doesn't tell us dividends yet. They actually have the ability. They have the ability to show dividends. I saw it in there. But then the clearing firm had the dividends show up and then they took them away. So they came out of track and trade. So we can't use track and trade for dividends. We have to use this little program here, FinViz. All right, so that's May 1st. We got paid. Ooh. All right, 52 on May 1st. Write it down. May 1st, we got 0.526. And we got to go over and see how many shares do we have of how many shares? Oh, that's MSFO. MSFO. We don't have very many shares. But we did get paid, so we can't complain too much. 28 shares. 0.28. Oh, wait, just 28. 28 times 0.526. 0.526. $14.72. Does that sound about right? Microsoft, MSFO. Yeah, that's look, we got $9 last time. This time we got 14. So we got 5-1. We just go 051 2025. This one we're not doing. We're not doing months because there's only one per month anyway. Center that. And we said we're going to make $14.72. And that's not bad money. That's not bad return on a $500 investment. Now this one we got $54. Let's go look at Tesla. How many shares we have? 3,531 shares. Let's write that down so I have to keep going back and forth. 3,531.07. Oh, the problem is we might not be getting paid yet. So day 27. We don't get paid on Tesla till day 27. Wait, we got to put Microsoft over here in the list. I heard you. Hey, look at that. Kirk says, Pit News Magazine rocks. So all you guys who don't have it, go get some rocks over at Pit News Magazine. All right. It does rock. It's a cool tool. It's a cool tool. I do say so myself. All right. So Microsoft, we got to put our equal sign in here. MSFO 1472. Now, why are you doing all this spreadsheet, Lan? Why don't you just look at your little, why don't you just go look at the total of your account over in wherever your brokerage firm is? Because your brokerage firm doesn't do this. Your brokerage firm doesn't add your dividends in to the profits. They only look at the profits, the up and down of your share price. That's it. Works great for your accounting. I mean, for your tax returns. It doesn't work so much. And it doesn't actually do that because dividends are their income. Sorry to say, you're taking profits. So it's income. So you have to pay, but they do let you just pay long-term capital gains on it, not short-term capital gains. So you pay long-term capital gains tax on your dividends because it's income. Even if you reinvest it, you still have to pay your taxes. But you don't have to pay taxes twice. You don't have to pay it next time when you take it out. You only have to pay it when you receive them. All right. So long-term capital gains. Don't forget to save some money for taxes. Now, we did a little tax strategy in Pit News Magazine. If you want to know how to pay your taxes on your dividends, you better have Pit News Magazine. If you don't have Pit News Magazine, you're not going to know how to pay your taxes on dividends. And it's in the current version. So if you go subscribe today, you can get it. All right. So getting distracted. You distracted me, Kirk. It's turning me into a Pit News Magazine salesman over here for a minute. Oh, Bruce is there too, saying the same thing. Bruce, thank you very much for the kind words. And we're going to come in here. Did I get everything done here that I was doing? Microsoft 1472. We got it. Okay. So now we have to come in. What's our next one? Next one is Misty. Do we get paid on Misty? MSTY. Do we have any Misty? We got to have Misty or else it wouldn't be in the list. MSTY. There it is right there. Day 19. I don't think we're going to get paid on that one yet. Of course, this is fungible. It moves up and down. That's not fungible. That just means that it's fickle. It moves up and down. So we got 56,000 shares of this one. This is borrowed money from Grandma and her brown paper bag. We need to pay her back, but she's not charging us interest, so that's good. Nice Grandma. We later invested 6,311 from our opens trades, so that's how we got into that. So we got some money we got to go spend and give Grandma her due. All right, that's how we did that one. We borrowed 50,000 and we got to pay grandma back. That's all right. She's not charging us interest because she's a good grandma. So let's come in here, and Misty's the next one in the list. Let's go see if, I don't think we, MSTY. We don't have a MSTY. This is one I got way too much money on. Let's see. But it's nice. I like the dividends when they come in. That's sweet. May 8th, we got paid. How did we get paid on Misty? That's a good deal. How much we get paid? $2, Misty, MSTY. How about this? This is one of our big ones. 2.373. $2.37 a share, and it's trading at 23. Man, you guys should go buy a whole bunch of this stuff. Why wouldn't you? Because it's Bitcoin. Do you think Bitcoin's going to go to the moon? If you do, you should have a lot of this stuff. I thought Bitcoin was going to go to the moon. In fact, Bitcoin did go to the moon, and I made a lot of money. But then it didn't go to the moon. All right. So, but if you think Bitcoin's going to go to the moon, you should buy like shit tons of this stuff. Right? You should go out and go into the garage and start selling everything you got. You should become best friends with Facebook. What do they call that thing? Facebook seller thing. Facebook community, or I don't know what the heck it is. Something on Facebook you can sell stuff. It's like classified ads on Facebook. You should become best friends with Facebook classified ads, and you should just go out in the garage and sell everything. I mean, I don't care what it is. You got an old Harley that's sitting out there. You only ride it once in a while in the summertime. Go sell that thing. Why? Because you can probably get 5, 6, 8, 10 grand for it. Turn around, put that 10 grand in Misty, and it'll pay you enough that you can go down and buy a brand new Harley and make the payments on it. And still you don't want to own anything and be happy. Just kidding. It's not the way this works. You just want to go sell everything you got, get the money, put it in here, and then take the money that it pays you every month and go buy it back. That's the point I'm trying to make. Go sell everything you got and then go buy it back on a loan. Borrow the money. Then this thing makes the payments. You got brand new shit. Get rid of all your old shit. All right. All right. What are we doing here? I lost my momentum again. All right, 2-3. Did I write that down? I did. 2373, May 8th. Got to write down May 8th. All right. Let's go see how much money we made. 1,009. We got 1,936 shares. 1,000. Grandma's going to be happy. 36.53 times. How many shares? 1,936 shares times. How much we getting paid? $2.37 a share. 2.373. Don't forget the 0.3 equals $4,595. You could buy yourself. You could make a Harley payment with that. All right, you can make a Harley payment with that. So let's come down here and go down to MSFT. Not MST. MSTY. It's scrolled off the screen. MST, where is MSTY? MSTY, oh, there it is. And the day it went in on May 8th, so 0508, that was a good payday. And we got $4,595. Look, our biggest one is 3,900 here. Then we got 3,900. Then we got 2,000. And then we got 2,000. Now we got $4,595. We love it. We love it. We love it. Don't we love it? All right. 4,500. That's on a $56,000 investment, guys. That's a $56,000 investment. I just made 4,000. Actually, this is our portfolio. We made $4,595 this month on that Misty. All right. Go get yourself some Misty. Go sell that. Go sell that hog. Go sell it. You could make a payment on a new hog for $4,595. Now, I know a hog's not going to give you $56,000, but there's some out there that are pretty close to that. I mean, there's some expensive motorcycles. Man, 4,500. Now, what are we going to do with that? All right, we got to put it over here. So we're going to come over here and we say equals $4,595. It's a sweet, buddy. Sweet, sweet, sweet. And think about it. I've got like, how much of that stuff have I got? I've got way too much. I got like $200,000. So that's like of that stuff. And so if I made $5,000 for 50,000 and I got like 4 of those, it's going to be like 4, let's just roughly say it, well, $5,000 times 4, 5,000 times 4. How much is that? I made 20 grand on that last payday. About 20 grand. 20,000. You can handle $20,000 a month, right? Off of one investment. That's only $200,000. $200,000 gives you $5,000 a month. You might be able to, and then you add that to your Social Security, and that's another, well, 20 grand a month. That's $200,000 a year. You might be able to retire on that. That's all I'm saying. That's called UBI, Universal Basic Income. Now, of course, I don't know if you want to put all your eggs in Bitcoin basket. You might want to spread it out a little bit like we've done here. But that's up to you. Do what you want. I don't care. I'm just telling you what I do. All right, here we go. So that's that one. And the next one is Tesla. Do you think we got paid on Tesla? I don't think we did. Because it's towards the end of the month. Let's go look anyway. Things are crazy right now. We got paid on Misty, and I didn't think we would. TSLY. Nope. Last time we got paid was April 17th. Today's the 13th, 14, 15, 16, 17. So if it holds true and sticks close to, we've got 4 more days, and we'll make 66 cents per share. Let's go see how many shares we got of Tesla. TSLY. We got 3,500 shares. We're going to make 66 cents a piece. That's if it does the same as last time. 0.66 times 3531.07. We're going to make another $2,330 on our Tesla investment. And that's if it sticks close to what it was last time. 2,300. That's like half of what Misty paid. Misty paid 4,500, and we got basically the same amount of money in both. We got $54,000 in Tesla, and we got $56,000 in Misty. Whoo, baby, we're rocking and rolling, man. We are making money hand over fist. We don't know what to do with all our money. We do not know what to do with all our money. So we're up to $5,000 so far this month. Wait, we haven't tested. What about NVIDIA? NVIDIA is small, but we need to check and see if we got paid. We'll take it. Makes a house payment. Make a car $193. Well, makes a air conditioning bill payment. How's that? Let's see. NVIDIA. Day 25. I don't know if we'll get paid on that one. Let's go look anyway. NVDY. Come on, it's like rolling the dice. Did you get paid? No, that's still in April. All right, let's go see the other one. What's the other one we got? So Tesla, NVIDIA, Palantir. We got a little Palantir in this portfolio. So let's go see. We're not going to get paid on Palantir either. It's day 27. Let's go look and see, though. Let's go look at Palantir. PLTY. Yeah, last time it paid out on April 24th. So we got a couple of days until we get our Palantir money in. So, all right, that's it. That's the name of the game. That's all I got for you today, guys. Hopefully you had fun. If you enjoyed this class, go ahead and hit that thumbs up. Give me a little thumbs up. That's the kind of thing I look for. And I hope you'll come and join me tomorrow afternoon for day trading. 1 o'clock tomorrow afternoon, Mountain Standard Time. Make the adjustments for your time. And we're going to play a little bit with some day trading stuff. All right. So come and do that. And then Thursday, we'll follow up and we'll take a look at how some of these options are doing. And we'll cover some more stuff, see if we can't learn something new. How's that sound? All right. That's all I got for you guys. If you want to leave me a comment or ask me a question, do that down in the comment section. Just let me know you were even here. That's nice to see too, and see if anybody lasted this long. Go down there and say just put a little smiley face in the comment section. Not in this comment section, not in the chat. Actually out in the comments. Go put a little smiley face if you got to this point. I like to see a couple smiley faces out there. Let me know you made it. So Made it all the way to the end. All right, there's Kirk coming in saying he made it to the end today. So, all right, guys, we're going to let you go. And if you have questions, let me know. I'm here for you. Just going to answer your questions best I can.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.